Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
This is going out there. It's April 3rd. I'm Frank Curzio, the Wall Street Unplugged podcast. We'll bring the headlines and... tell you what's really moving these markets. On today's show, Disney turning to illegal tactics to fend off Nelson Peltz. Apple makes a huge splash in AI. And why this podcast may be the last one I do in person. But let's begin with the pullback in stocks. If you're watching CNBC, you think there's a monumental crash taking place. Everybody worried and went down, what, 1.5% from our highs? All-time highs? What's interesting is the pullback is coming as we're seeing much, much better than expected economic data. And let's talk about that. So you have the PCE data from Friday, which markets were closed pretty much in line, but still showing you a 3% inflation, much higher than the 2% benchmark we all, it's been pounded in our heads from Powell over the past 2 years. CPI, PPI, right, last 2 months, both came in higher than expected. We had GDP from last quarter, that final revision, 3.4%, was revised higher than the 3.2% that was forecasted. Consumer spending, much stronger than expected. And this all happened in the past couple weeks. Manufacturing data from yesterday, man, above 50, which means manufacturing is now growing, and it's growing for the first time in 18 months. And it wasn't some BS indicator or what they say when jobs miss or GDP numbers miss. Due to this, temporary this, weather, bullshit. It was led by new orders. Can't fake that. ADP data from today precedes the data we're going to get from the jobs report, which happens the first Friday of every month. Showed a much bigger jobs gain than projected. Also showed wages rising over 5% year over year. So now, because of all this positive economic data, GDP estimates for 2024 have been getting revised sharply higher each passing week. A few months ago, I was saying how we're not going to see more than 2% in any quarter when it comes to GDP 2024. 2 weeks ago, a lot of those estimates were pushed sharply higher. Now we're expecting 2.4% for all of 2024. And I think it's going to be revised even higher. We may be closer to 3% after the latest round of data. So now we have this economy chugging along much stronger than anyone expected. So why would the stock market be pulling back on this positive news? I'll tell you why. Interest rates are surging. And they're surging because the Fed, remember, probably, what are we, in April? In October, we were expecting 6 rate cuts. Then it went down to 3. Now it's 1. Now they're saying maybe 1 in the fourth quarter, maybe 0. Now, why is the Fed raising rates? Why did they raise rates so much? Because they needed to slow down the economy. Because inflation was crazy. And they did that to some extent, but they said we want it slow. We need it slow before we start cutting. And out of nowhere, what happened? Well, we have a lot of government spending taking place. A lot. You have AI taking place, which is good. A lot of companies, just valuations. Some of them are out of control. Some of them are not even close. They're still cheap based on the growth projections. But now we're seeing the economy heating up. We're seeing inflation come back into the workplace. It's the marketplace. Look at oil prices. Look at commodities. Look at gold. Look at some of these things. The commodities are going higher across the board. Food prices going higher. So now what's the Fed to do? Because now we have interest rates of the 10-year surging again. This makes for dangerous conditions. And we have the 10-year start at 3.8, and we're expecting it was trending much, much lower. But it started the year 3.8. Now it's pushing, it's almost 4.4%. That's a major move. A major move. Doesn't sound like a lot, but it is for the 10-year. In such a short period of time. So what that indicates is that forget about cutting. The Fed has to debate whether they should just leave rates as is Or maybe start hiking again. Now, that may sound absolutely crazy, insane. That's never going to happen. Frank, you're out of your mind. Told you for a long time. Rates are going to go much, much, much higher than anyone expected. Anyone expected, we said that. We also said that the Fed's not cutting rates 9 months ago, 6 months ago, and the Fed's crazy, and they came out and they pivoted. Thought I was going to look like an idiot for a second there until we saw the data. But based on what Powell is saying, based on the Fed is saying, if you take him for his word, which he said that we're not lowering rates, so we see the data, and he was right. Everyone projected that we were going to see rate cuts, 6 months ago, 3 months ago, and we haven't seen it. Because everyone's like, Powell's full of shit. You don't know what he's talking about. We don't believe him. We don't believe that guy. Well, based on that, if you do believe him, and he's saying that we need inflation to come down, and 3 months ago he said, I want to see more data that's telling us that we can cut, they're not cutting. There's no way they're cutting. You want to risk 4 or 5% inflation coming back into this market? Maybe higher? That's worrisome. Because right now, the housing market is, I won't say frozen. If you're buying a new house and you have cash, I mean, the home bill is doing good because of the supply issues we have. And it costs cheaper. It's cheaper to buy a brand new home than an existing home right now. Might get a little bit less square feet, but on average, which is crazy. It's never happened before. History of a country. So the home bill is doing good, but overall, the housing market, you try to sell your house, good luck. I live in Florida. I live 2 blocks away from the ocean. Great house, priced right. Took me 8 months to sell it. 8 months. And I didn't get a lot of offers. Not like bullshit offers and no, what are you creating? Nothing. That's Florida, hottest market around. Everyone's moving here, along with Texas. We have an economy that's clearly not slowing. Inflation moving higher again. And everyone's saying, well, the Fed's probably going to cut. They're going to cut. They're going to cut. They're going to cut. They're going to cut. Remember gold? Gold was moving higher to new records on anticipation that the Fed will cut. Now it's moving higher because we don't even care. So I was laughing. I was like, just for all the gold bulls out there, and I'm happy gold's going higher. I own gold. I own gold stocks. And probably plays for a long time. I was just sick and tired of the bullshit. With 6-7 years, you're hearing the main thesis, inflation, if it's deflation, it's a store of value, all this stuff. More government spending. We saw that stuff from 2012 to 2023 without gold doing anything. And finally, it's pushing higher because the government will not stop spending. They won't stop spending. Oh, I'm sorry. They will stop spending. They're not going to replace the Strategic Oil Reserve. Not going to. Petroleum Reserve. They just announced that they're not going to do that because oil's over 80 and they want to save taxpayers money. They're going to give $8.5 billion to Intel. I don't know if you saw that quarter or the report from yesterday. It's getting nailed today. Massive loss, $7 billion on the foundries. And what do they give? What am I giving my $8.5 billion? Right, part of the $8.5 billion, my tax dollars. We're giving it to Intel to build fab plants in the U.S. that is getting annihilated on and losing billions and billions of dollars. Going to have a manufacturing plant that they're going to build to make chips that nobody's going to buy. But we want to save money, the taxpayers' money, because all of a sudden we care about taxpayers. We'll send $100 billion or close to that to Ukraine. Don't worry about it. We're going to keep sending that money no matter what, endlessly. No plan in sight. But I know we promised you, especially buying that oil from OPEC, we said we're going to buy from Saudi Arabia. We promised you over a year ago, we're going to buy that oil. Because we artificially pushed those prices down 2022, which every president does. Election years and things like that. Actually, 4 years now? To help lower oil prices, you flood the market. And now you're supposed to purchase that back. Oil prices were below 80 for how long? The last 5 months, but even going out past a year. You could have bought it all that time. Now they're above 80. Oh, we're not going to do it. We're not going to replenish it. We're not going to replace it. And buy oil now. Even the promises of the Saudis that that's what you're going to do because you're artificially lowering the price and have the Saudis on board and say, don't worry, we'll purchase this oil for you and it goes higher. And then you screw them and you wonder why they're doing transactions and getting off the dollar, right? Oil never traded. It was dollars and that was it. You're not doing deals like China, India. You wonder why. I mean, you keep screwing your partners like that. That's this current administration right now. It's crazy. But inflation is a lot higher. What's the Fed going to do? The Fed's stuck here. You would think, well, the economy is great and that's awesome, but inflation is going higher. This was the whole reason why we started raising rates, guys, because inflation. And it was so late to the party. Wait till we had inflation well over 5-6%, went to 9.5, whatever. Then it crashed. Then it came down tremendously, but still well over the norm, which is 2%. So now, what are you going to do? Now inflation is going higher. You said you're going to look at the data. If you look at almost all the data across the board, not all of it, but a lot more. Because 2 months ago, 3 months ago, I would have said, hey, I could provide 10 statistics that show you inflation, 10 statistics that show you deflation. Now it's like 80% inflation. You're seeing wages rising now. You're seeing, again, the PPI, the CPI the last 2 months, much higher than expected. New manufacturing through the roof. Commodities starting to move higher. Food prices are going higher again. You guys go out to eat. You buy your food. You see it. But the economy's fine. We're all fine. Everything's going to be great. We're in very dangerous conditions right now. And we're talking to a Fed that has no clue because there's no playbook. There's no playbook that saw these conditions in the past that they could say, hey, we'll point to that. It's not like Bernanke said, listen, we cannot do what we did in 1929. We can't do what we did in the Depression. Flood the banks with cash, make sure the system is stable, and everything will come back. And he was right. You can get pissed off about the money they spent. You get pissed off at anything. If that didn't, we'd still have 30% unemployment if we didn't capitalize the bank. The banks would have went under. They were done. Across the board, they were done. The whole financial system globally was about to collapse. They had to stabilize the system. They knew that. They had a playbook. And said, hey, we effed up 30, 31, 32, terrible. Let's not do that again. There's no playbook right now. They thought, okay, remember, that's why even when we had inflation going higher, Powell, very, very brilliant guy, studied economics probably for 40, maybe 50 years. Not too sure how old he is. Saying it's going to be transitory. It's transitory. It's coming in. It wasn't like you were just a tiny bit wrong. I mean, that's as wrong as you could ever be on anything in your life. If you're saying that it's going to be transitory and we go to inflation of 9.5%, when you think it's going to go back down to 2%, I mean, that's like betting a game where the spread is 1 point, the team wins by 187 points in basketball. That's how wrong that was. And even now, there's no playbook for this. When you're going to cut, you should stop saying that we're going to cut. You should stop indicating to the market that you're going to cut. The time to cut was 3, 4, 5 months ago. Inflation was coming down sharply. Now you see inflation come back to the market. Stop talking about cutting. Because that leads to the indication that's happening. And I could tell you, very, very, very dangerous conditions right now. I know it's an election year, so we're supposed to see stocks move higher. We're supposed to see Fed cut rates, political. I know all that. And so does everyone else because they say it every single freaking day. Which means maybe a lot of that is priced into the market. Got to be a little careful here, guys. Valuations are stretched compared to where interest rates are. You have the government funding everything in their power, throwing trillions at anything they possibly can, including giving Intel $8.5 billion, which I'm going to mention on every podcast forever going forward, because that's how pissed I am. Can't give my tax dollars to like NVIDIA, AMD, somebody else. To give it to a company just lost billions on their fab business. Fantastic. But at least it's saving us dollars by not purchasing oil to refill the SPR because it's over $80. Gotta love it. So yes, you're wondering why the market's coming down with the economy doing so well? That's why. We have measures in place that are supposed to slow down the economy. And right now, if it wasn't an election year, the Fed would be discussing a possibility of hiking rates further. But it's an election year, so you're not going to hear that. We're supposed to be in a recession. We're supposed to see a slowdown. We've seen a slow. Now we're picking back up. That means interest rates aren't high enough, and that's clear of what the 10-year is doing and what rates are doing and why they're starting to surge again. That's telling you. That's that indication. Let's move on to Disney. Favorite company in the world. Annual meeting today. Shareholders going to vote whether billionaire and large investor, he owns what, $3.5 billion Disney? Nelson Peltz is going to get a couple board seats. Of course, Bob Iger, CEO, the board are against this. They don't want Peltz near the board or anyone who's going to put on the board. And I really can't blame Iger. Because if Nelson Peltz gets in there, he's going to clear house. You're going to see a lot of changes. A lot of stuff going on. And it's going to be better for shareholders. It is going to be better for shareholders. But a lot of this is political. It's political. If you're looking at Disney, Disney's still a broken company. I know if you own it, went down to what? 80 it's low, wherever it is now, a little bit over 100. And I get it. The numbers are better. But it's a broken company. You might not think that because, hey, the last couple of quarters, especially the last one, they paint this glorious picture. Things are great. I mean, investment in Unity as well, which no details at all. I don't know. We're great, and we're reinstating our dividend, which I think is absolutely insane at this level. So you saw the numbers get better, but they're getting better because they're still cutting costs massively. They're not getting better because they have these growth initiatives. They don't have these growth initiatives or the growth initiatives because Disney is still trying to make streaming work, which it can't. It's impossible. They never will. Since they're no longer spending big dollars on new content, which they announced, so they can't really compete with Netflix, Max, which is HBO. You see programs come out of that. It's awesome. It's awesome when you see. I just watched Stranger Things for the first time, the whole entire thing. Man, I was glued. That was awesome. That was so awesome. Can't wait till next season coming out pretty soon. But even me talking about that, people talking about Netflix and things coming out on HBO and all that, these are things that come on that platform first. Disney's best content doesn't come out on their streaming platform first. It's a secondary platform and saying, hey, if you want to watch it for a second, a third time after you see it in the movies, then you could do it on streaming. That doesn't work. It doesn't work in streaming. You'll never compete. You can't compete unless you start saying, you know what, we're done with theaters, which is going to crush you because AI is probably going to result in a theater making a massive comeback because you're going to see so many more movies produced. I'll cover that later. Boy, Hollywood's scared shit. They should be. They really should be. Every actor, every singer, you should be. You think you're going to get protected. And you're going to say, well, you know, they're stealing our identity or vocals, and they're using, you know, things that we created. And I'm telling you, AI is going to find a way around it. It's going to find a way around it. Just like when singers found a way when someone purchased their masters. And I think this was Taylor Swift, or someone told Taylor Swift this and said, listen, all you have to do is like retape them in a little bit of a different format and you have them. And I think that was interesting when I heard that story. Because those are the ones everyone's going to want. There's ways around it. There's ways around it. There's always ways around it. It's like the tax code. They could put in laws that don't make sense and change it every year so no one will ever understand it outside of accountants you've got to pay a lot of money to and lawyers and everything else to do your financials. But you always find ways around it. When it comes to Disney, look, it's a big day today. Let's see. By the time you listen to this, we'll know. But if Peltz gets board seats, he's likely to push for big changes. Since he's a huge shareholder, it's probably really, really good. But one of the new board members that he's going to elect is former Marvel executive Ike Perlmutter. Barely pronounce his name, but I know a lot about him. I know that Iger freaking hates him. Like demote him, put him in other positions where he didn't have to, operate with a lot of people and he just got pissed off. And then, that's who he wants to put back in place, which is going to be, it's really, really hard if you got two people, especially if it's a CEO and someone else just brought on board that hate each other, that has a big voice like that. I don't know if that's the best thing. If they came to a compromise and that guy wasn't going to be elected to the board, maybe you might get more shareholders. I don't know. But anyway, they're going to vote, and the shareholders are going to determine if Peltz gets those board seats or not. Now, obviously, what do you have between Peltz and Iger? You have this lobbying taking place. They're going to the biggest institutional shareholders and saying, this is why you should keep the board, and Peltz is like, this is why they need to change, and he's been vocal about it, and it's on CNBC and brought up some really, really good points. Board members don't have really big stakes in the company, and since they've been around, most of those board members' stock has done shit over the past 4 or 5 years. And that's fine. That's fine. If you're lobbying BlackRock, that's fine. However, what's not fine, what's not allowed, and it's actually illegal, is for a company, Disney, to pre-release the outcome of its votes before the election is finalized. For example, Vanguard, BlackRock, T. Rowe Price, CalPERS, George Lucas, all big Disney shareholders. They could vote and come out even before the vote is tallied and say, listen, this is who I'm voting for. Even Kramer came out, old Disney's charitable trust, said he's going to vote for Peltz. Others said they're not. They're going to vote for Iger, for the current board. But it's illegal for the company, Disney, to come out and say this. since it could influence the rest of the votes. For example, if Disney says that, hey, they're winning the election right now before all the votes are tallied, which they did, maybe an institutional investor like, I don't even know if Wells Fargo's an investor, use them as an example. And maybe they're going to vote for Peltz. They might change their mind if Disney's coming out and saying, hey, man, we're way ahead right now. And why would they change their mind? Because when Disney needs to raise money, which they will, $8.5 billion payment they got to make for Hulu, which is losing subscribers. Man, getting a lawyer in that Comcast deal is fantastic. You put a bottom valuation that couldn't go lower than that, with streaming absolutely crashing in most markets. Brilliant strategy. And Disney had to fall for it because they need Hulu. But when Disney needs to raise money, acquire another company, if a large investor says, calls Iger and says, hey, you want to come to my event and speak, that gets thrown out the window if that firm announced that they're voting for Peltz. So this is what happened on Tuesday. Remember, votes today. This is on Tuesday. This is early. Media outlets. You had Reuters, Bloomberg, probably others, I'm not sure. They reported that Disney has enough votes to fend off Nelson Peltz. That's what they reported. And they said that information, and of course, this is what they said, these outlets. This is based on unnamed sources. Others said people familiar with the matter, didn't name anyone. They said that's where we got this information from. That information has to 100% come from Disney. Disney's the only one that knows those results. They're the only one that's talking to this show. It has to come from internally in order for this story to be printed, which makes this illegal. Disney should know this. They should be getting in trouble right now. Will the SEC respond? Other government authorities respond? Probably not. And Disney is a left-wing run establishment. We saw this in a fight against DeSantis. And Biden publicly came out and supported Disney's special law, which had put in place over 50 years ago, which nobody really knew about until they started fighting DeSantis and put words in his mouth that he said, don't say gay bill, when he said this shouldn't be something that kids should be learning. And they turned it into you're not allowed to say you're gay, right? And he flipped. And he flipped a little bit too crazy, DeSantis. He's like, F you. Sometimes he goes off the rails. They found out about this in place of 50 years special law allowing Disney to govern its own properties where they could charge extra taxes on top of the local taxes. No other company has that. And it's weird that the Democrats would support something like this, considering, if you look at Democrats' agenda and Republicans' agenda, right? It's all about, who should pay higher taxes, climate change. I mean, the normal fights, right? Now we're getting into the safety of our children, which was never on the freaking table, and immigrants coming in and murdering people. Those things were never on the table, right? They were never on the table before when Democrats and Republicans disagreed. They disagreed pretty much about common topics. And that common topic was taxing corporations. Democrats are more in favor of taxing corporations more, and Republicans say, well, that money's better spent to give to the people, and back and forth and whatever side you're on. So the fact that you're giving Disney these special privileges seems like it should be a Republican thing, not a Democratic thing. But I guess Disney didn't pay the right politicians, or DeSantis didn't get the envelope. Anyway, Disney needs to be called out on its illegal proxy voting tactics. They need to be called out. I'm sure nobody will, because they're on the right side of the political aisle, but what they're doing is illegal. Bill Ackman does a great job of this on Twitter. Highlighted all this stuff. But this is right. Disney is doing this illegally. They cannot say where the votes are leaning. They can't say it. Other places can announce where they're voting for. That's fine. But the company can't. It makes a lot of sense. If you're in a war, are you going to support? And it's like, all of a sudden you hear one side is starting to win. Are you going to come out publicly and say, I'm going to support the other side? It's going to change. I'm going to be like, holy shit, the other side's winning. I'm going to join them. Otherwise, I may die. I may get killed if I support the other. It's going to influence your decision before that war's actually over, before the votes are actually counted. And nobody's talking to them, right? They won't mention this anywhere. Like CNBC, Fox. I didn't see this any place being mentioned. And this should be a big deal. It should be a big story with this vote taking place. So let's see what happens. If you're an investor in Disney, I would hope that Peltz gets those 2 board seats. And I changed. I disagreed until I heard him and what he was saying and what he was right about. And the fact that Iger, he's only going to be there for another, year or so? I hate the fact. I thought they were going to get out of streaming. Open 60 parks. I mean, it's a great American brand. It is a great American brand. It used to be great for families. I mean, the whole left agenda bullshit. What were they doing? What were they thinking? And that's under pretty much the current management. And I know Iger's there to change that. And that's great, but having that change along with 2 other board seats that are pushing for shareholder value is something that you want. They're doing this because they want their investment to go higher, which is why you're a shareholder of Disney. And if you don't do this, it's going to be pretty much the same. And the same has been really, really shitty for 5 years. For 5 years. While every company has gone gangbusters higher outside of gold companies. And think about from the pandemic till now, and the S&P 500, how much it surged off its lows and how great so many companies have adapted and doing fantastic. And look what Disney still is. Again, when they get better because of growth initiatives and not because of cost cutting, we'll see. But they're pretty close to cutting as much cost as they're going to cut in that company. Let's see what happens with that vote. So, Apple has been getting its ass kicked. Right? It's been horrible. So many different things. I mean, you can name that getting sued by the government now. It's coming after them. You could say China is terrible, which is the biggest growth market, right? Very weak demand there. I mean, double-digit decline in sales for iPhones. Most importantly, its lack of interest to go all in on AI, where all of your biggest competitors and biggest companies in the world were so far ahead of you, and you saw their stock prices move and announcing new products and all this stuff has been fantastic. Well, now that last part, when it comes to AI, has just dramatically changed. So Apple just released this new AI model called Realm. Pay close attention. And most of you think AI is in a bubble or whatever. AI is not even on your phone yet. It's not even on your phones. Seriously. But now, they just released Realm. And based on a research report it just published, it's already outperforming OpenAI's ChatGPT-4, which is one of the top models out there. Everybody uses that. That's the one that they're using in the computer. That's the one, again, they got biggest technology launch on any product in history. There's 100 million users in 2 weeks or whatever it was. Now, this research paper that was reported, which you could find on my Twitter account, or you can Google it, but at Frank Curzio stuff. Follow me. You'll see me talk about all these topics, have fun, debate people, but definitely follow me on Twitter. But that research paper was the 3rd release from Apple in the past few months, teasing AI and its upcoming features for its new operating system, which of course is it's going to be its next generation of iPads, iPhones, watches, things like that. I'm going to tell you something. Apple is going to be a monster in AI. They have more cash on its balance sheet than the market caps of 300 of the 500 stocks in the S&P 500 based on market cap. That's insane. I'll say that again. More cash on its balance sheet than the market caps of 300 of the 500 stocks in the S&P 500. That's how much cash they have. That's how big Apple is. In other words, Apple could spend tens of billions of dollars in a blink of an eye. And you wouldn't even notice because they generate, 50, 60, I don't even know, 60 billion in free cash flow, whatever it is. They could spend that, tens of billions over the next couple of years, hiring the best developers, engineers, the best AI talent in the world, and it looks like that's what it did. Now in June, mark your calendar, because Apple's going to hold its annual Worldwide Developers Conference, and you're hearing this here first. This is going to be Apple's biggest event since it released the first iPhone. There's going to be tons of AI announcements, of course, in its products, operating system, and things like that, but including its integration into its new Apple Vision Pro VR set. And when they make that announcement, this is going to jumpstart a trend that many people have forgotten about and just wrote off, and that's the metaverse. Mark my words. I know. Frank, you talked about metaverse a couple of years ago. I was actually going to do a movie on it. I interviewed a ton of people. It was so big, and then what? 2022, Meta stock crashed. They said, all right, we're going to spend a little bit less on that, and it's going to take a little while to develop. Holy shit, is it developing behind the scenes? What AI could do now, have robots, avatars, inside games, perform over 1,500 features to act exactly like someone who's playing the video game, is going to fill up these worlds. It's going to be, that's why Fortnite's great. That's why Roblox is great. That's why Minecraft is great. You got millions and millions and millions of people online all the time. That's why it's tough for the metaverse, which is open source, which means everything you create your own. You can have NFTs around this stuff. You can buy and sell, exchanges, anything, open up businesses and stores virtually. I mean, this is really, really exciting, crazy stuff, but it's so hard to break in when you have all these other platforms that are controlled by the big guys that have so many people playing them already. And for those who think I'm crazy, NVIDIA just talked about it on their call. Not only on their last call, but they just talked about it in their latest presentation when they were announcing their newest chip to come out in 2025, Blackboard, right? I mean, they were using the term Omniverse. They talked about it a lot in their last call. Meta talked about it a lot in their last call. So now you have Apple, who's going all in on this, which is why they released the headset. Again, no one's really going to pay $3,500, but that's going to go down a lot. And they're going to display so many new programs and uses for gaming, business, healthcare. So if you think the metaverse was dead, remember something. The three companies that I just named, Apple, NVIDIA, Meta, all of them talking about the metaverse like crazy, especially Apple's going to a ton at this conference. These three companies have a combined market cap of more than $6 trillion, and that's what they're talking about. And put that in perspective, there are only two countries in the world that have a bigger, and this is based on GDP, that are bigger than those three companies combined. And that's the U.S. and China. The only two countries that have a higher GDP than that. $6 trillion combined market cap. The three biggest companies basically in the world, aside from Microsoft, are all in, and aside from Amazon, are all in on this trend. Do you think it's going to develop? The amount of money they have in their balance sheets with AI now? That Apple event is going to be huge. The Worldwide Developers Conference is going to happen in June. Pay attention. It's going to be a really big event for Apple. Probably a good time to buy the stock ahead of that, because I think it's got a lot of catching up to do. And it's nice to see them, because they're back to the wall to go all in on AI. All the other problems, iPhone sales in China, okay, fine. You knew that was happening for a long time. You could adjust, figure it out. India, they've been pushing to India like crazy. You have regulatory stuff. They have money aside for that. Again, temporary. AI is a long-term problem that they seem to fix, especially with Realm. And now, combining that with their Vision Pro, going all in, metaverse, services, AI on their phones, Apple's looking pretty excited right now for a company that's been doing really, really terribly compared to its peers. So, looking at the bigger picture, what does this mean? AI still very much in its infancy. I say, well, Frank, NVIDIA's through the roof. I saw so many AI. Everyone's talking about AI. Let me explain. Last Tuesday, we hosted an AI event. We had a Q&A session, which was live. Great audience. A lot of people, hundreds of people stayed on. There's so much interest where I answer questions. Again, this is all live for over 2 hours after the event. I was tired. A couple people asked questions. I answered half of them, and I forgot what they asked because millions of data, and going for 3 hours is 2.5 hours is not easy, right? Just constantly questions and throwing stats and again, preparing for this stuff. And it was great, though. It was just awesome, right? Just hanging out, drinking a beer. Daniel feeding me questions. It was great. That was last Tuesday. That was 8 days ago. Here's a list of news that happened since then. Google, Intel, Qualcomm, and ARM came together to form the UXL Foundation that's going to help build an open source software suite to help compete with NVIDIA. They're combining to make chips. Whether it happens or not, I don't know. Then, Elon Musk announced his AI startup called XAI just released its latest version of its Grok chatbot. That's an AI chatbot, which is going to be rolling out on the X platform, Twitter platform. Microsoft and OpenAI just announced a plan to build a $100 billion AI supercomputer, which they're calling Stargate. To put the $100 billion just in perspective, because we say billions and trillions and it kind of gets lost, right? To put that $100 billion in perspective, it's almost 3 times what Microsoft spent on CapEx last year. servers, buildings, other equipment, again, to grow the company. 3 times as much. That's how much is spending on this one project. You think Microsoft's all in on AI? Yes, that's going to get real scary when that happens. It's going to include millions of processors, which these chips cost upward of $30,000 each. It's insane. That was just announced. This is all in this week. Want more? OpenAI's Sora has been releasing new AI-generated videos. The first short film was released using 100% AI. Go see it. Again, follow me on Twitter. I'm reporting all this news. I'm following the right people. We got access to great newsletters, great people in this industry. The video game Fallout is turning into a movie. They just released its first trailer, which was 100% AI generated. And it looks freaking fantastic. You can't tell the difference from any trailer from an action-packed movie. Essentially just invested in Sanctuary AI. This is a company that makes human-like robots. You want to get scared shitless? Listen to this. Not only going to fill the workplace or fill jobs that are needed, so they say, right? Especially for manufacturing. But they're also going to be in homes doing chores for older people, handicapped people that can't get up. You're going to start seeing these robots walking around. And we're not that far away. You think we're far, we're not. Go listen to Joe Rogan, Ray Kurzweil. Listen to that interview. Little dry, but to see like this line, computing power, and how fast we're getting to this moment is insane. And that moment is AGI. Computers perform on the same scale as humans. We're supposed to hit that. It's supposed to take 80 years in 2019. Right now, it's going to take 2 to 3 years. It's probably going to happen even sooner. Let's continue. This is the news from this week. Amazon announces spending of like $2.5 billion to invest in Anthropic, the best companies in AI around. Started by ex-OpenAI employees. Also owns Claude 3, which also announced a few days ago that Claude 3 surpassed ChatGPT as the best AI platform. ChatGPT 4 was just released. It was the greatest thing ever. This is already surpassing it. It's almost realm. And this isn't like an opinion. This is based on the Chatbot Arena, which is pretty cool. Go check it out. Chatbot Arena, Google. This is a crowdsourced platform used by AI researchers to gauge the capabilities of AI language models. And they put them through this series of tests, every single one of them. And then they're saying this 80%, 90%, how it's calculus or how it performs like on tasks and what it asks you to do. And they have all these lists. So this is what it's based on. And it's fair. It's not like, it's not biased. But you see the percentage is the highest across the board for Claude 3. OpenAI, again, guys, this week, just unveiled voice engine. It's pretty cool. An AI model that can clone your voice after just listening to you for 15 seconds. Meaning, soon it's not going to be me personally hosting Wall Street Unplugged, which is at our new office. Stage it with a couple pictures in the back. Still building it, getting everything done. New computers, lights, systems. Really nice new studio. It's going to come out great. But it's not going to be me doing this anymore. It's going to sound exactly like me. You're going to see me moving my lips, which, by the way, models have just come out showing how you can create a video of yourself anywhere, and it's going to be walking and they're talking, right? So you could type in whatever you wanted to talk or whatever to say, and it's going to move your lips perfectly. The best thing is you can switch languages, and you can speak in a different language, and your lips are going to match the other language, whichever language you pick. Holy shit. So this podcast, soon, it's going to look like me. It's going to sound like me. But as you're listening, I'm going to be in a golf course, pounding down beers in the Bahamas. Telling you guys to sell everything. Got to sell everything as I slice my 4-iron into the woods off the tee box. Looking forward to playing golf again. I haven't been playing in a while. Been too busy. So this was all just announced in the past week since we had our AI Live event. And during our AI event, this is last Tuesday, we launched our Curzio AI newsletter, which is designed to find companies that have started implementing AI into their operations and divisions. They're very hard to find. You can't just type in AI companies because you get the NVIDIAs, Micros, things like that. So many of these names, small, mid-cap that I've been finding, already see massive benefits in productivity by using few employees, spending less, and yet you're seeing sales, margins, earnings soar. Some of them have been implementing these technologies a couple of years ago. And they're just starting to see the benefits now. And that's why they're not showing up on any screens, because they're not an AI company. They're just using a technology to enhance all the divisions that happens to be AI. So they're very difficult to find. You got to do deep fundamental analysis. You got to listen to a lot of conference calls, and then you find them. It's something I've done all my life. One name's in healthcare, small biotech drug discovery company that employs 160 people just with AI backgrounds. Including 2 vice presidents, one from Meta, one from OpenAI. Just signed 2 major pharmaceuticals that are going to use their AI platform to discover new drugs, which they could do using their platform at a much, much lower cost and much quicker rate than the 13 and a half years it takes to bring a drug to market, along with the $2 billion in costs. If successful, the royalties, because they get a piece of the royalties. That's how they're signing these deals. It's not like, hey, we're going to do these services. Like, you ever hire a marketing company? Yeah, we're going to do this, this, and this. And you see no results. They're like, sorry, but you paid them already, right? Most of that is shit. These guys have stake in the companies that they're partnering with. 2 big, large pharmaceuticals. And that's just 2. There are going to be much more coming. If successful, the royalties could be in the hundreds of millions, if not billions, which is crazy considering this company has around a $500 million market cap. Does $1 billion in sales. That's a $5 billion, $10 billion company. Okay, you're not going to find it on screens because they're not generating much sales. It's not really a healthcare company, and it's not an AI company. You consider it a healthcare, like technology company, I guess, within healthcare and biotech of how they're doing all this stuff, but it's very difficult to find in screens. I got lucky because I saw 2 other companies that are doing this, and I saw in a research report that this one was trading at some crazy astronomical multiple, which I would normally avoid, but I'm like, why does this company I never heard of deserve such a huge premium? And started digging in. I was like, holy shit, the whole presentation was AI, the whole entire thing. I've been doing this for 2-3 years. Well, everyone else is playing catch up in the whole in the whole industry. Another name in the portfolio, a 100-year-old supply logistics company with a $3 billion market cap that I think is going to be a $30 billion company inside of 3 years. Why is that? A couple months ago, they put out a press release showing how their AI systems, which they implemented 2 years, 18 months ago, get under the radar. Nobody really hearing about it. Everyone focusing on NVIDIA and all this other stuff, but these are companies that are using these technologies. So they implemented, of course, some of their divisions, and now they announced it's saving the company $1 million a month. Now, that may not sound like much, especially when we talk about Google, Amazon, Apple, and the $6 trillion combined value of those 3 companies and stuff like that. For this small company, it amounts to a 6% increase in earnings growth. Right off the bat. Right off the bat. In a world where S&P 500 companies outside of the major tech companies and AI are struggling for growth. So the 6% earnings growth, it's not just they're growing 6%, they're adding 6% on top of the double-digit growth that they're seeing. And now they're going to start taking market share because they can provide services that are getting products to customers much faster, much cheaper. And applying AI to their robotics division, logistics division is incredible. It's incredible. And there's going to be dozens, if not hundreds, of these small cap companies coming out with similar announcements. That's going to happen over the next 2 years. They're going to announce how they're benefiting tremendously from AI. And you're not going to know until you see that sales like taking off and you're like, holy shit, how did this happen? And when you see sales and earnings, margins, all that going high, what happens to the stock price? They surge. That's what Wall Street wants. They want to see growth companies that are spending less and growing earnings and growing sales. I mean, look at Supermicro. This company went from $90 to $1,000 in a little over a year because it said, the hell with everything else, we're focused 100% on AI. This stock didn't go to 1,000 because it's hyped up. This isn't like, maybe I should announce specifically the companies, but the companies with AI in them that put AI in their name. We're not talking about those companies. I don't know bullshit. You don't even know, they're not even AI related. They don't even have AI in their business. But this is a company where their earnings exploded. And you look at earnings in 2021, $2.50. They're going to report $22 in earnings this year. We talk about 3 years. When have you seen that happening? Well, AI. Small cap company going into a large cap company. That's an example. That's kind of an easy one to find because that is an AI company. But these other companies It's a logistic company. It's a biotech company that's using AI, so it's hard to find these names. So we launched Curzio AI. First product I launched under my own name in 7 years. Still have a special offer for Curzio members because I really want you in this product just like I really wanted you in crypto 6 months ago, which you should be really happy with, even with crypto pulling back a little bit. I mean, some of these names are already up like 60, 70, 80% right off the bat. This is a time to get in. Now's the time to get in. The time to get in when only 6% of companies are using this, are starting to use it, that number's going to go to 60% in 2 years because they have to. And if you don't, you're done. You're going to become Research in Motion. You're going to become AOL. That's the future of the world. And you're going to know that from this podcast, Wall Street Unplugged Premium with Daniel, and bringing on interviews with people, top people in this industry. Already did that for members. Interview with the director of AI from the Mayo Clinic. Man, just brilliant. Holy cow. We provide a special offer for Curzio members. It's a 40% discount, which is good on its own, but when you pay that price, I'm also giving you a free year. So you're getting it for 2 years. Again, I want you in for 2 years because that's when you're going to see this develop. You could have ups and downs in the markets, but you're going to see companies really excel. Companies outpace everyone else. It's not going to be whole sectors going higher. It's going to be individual companies that are learning to use AI to enhance productivity. Those are the things that are going to soar. They're going to start taking market share. This is the next wave of small caps becoming large caps, which you can't see anymore because they IPO at billion-dollar, multi-billion-dollar valuations. And all that growth is pretty much factored in before you're able to buy it, like Reddit for 20 years. Imagine being an internet company in e-commerce for the last 20 years, and you tell me you couldn't report a profit for 20 fucking years? You want to buy that stock? Go ahead. I hope it goes higher for you. But when it crashes, like AMC, you'll know why. Crazy. Just crazy. So AI in its infancy is going to be a big part of our company, Curzio Research, already is. We're seeing the benefits by implementing new technologies in our operations. And we're only in the first inning of doing this. And when I say, what is that going to mean? What is that going to mean for you? It's going to be really great. Because now if you're looking on our Twitter page, we're posting our videos. We're able to take this podcast, which is 50 minutes long. I'm going to try to keep these at 30 minutes, but a lot to say today. But you're taking these, and now we can put in AI systems that are going to create 10, 15 shorts for us, which is awesome. And that's what you see. You're seeing so many of the good podcasts in the Joe Rogans and Lex Fridman, and I actually like him. He's pretty good. He gets a lot of shit from people. I like his interviews. Gets a lot of great people. And that's what we're going to do. We're going to have much more content going out, right? Because a lot of the content is the podcast. And it's like, how do we turn this podcast and all this content? And you need huge marketing teams. You don't need that with these AI systems anymore. So you get much more content out from us. More videos, more shorts. That's how you build a brand. And you guys know, because a lot of you guys are subscribers, and anyone who subscribes to one product usually subscribes to a lot of products because they know we're not full of shit. They see me doing the videos. They see Daniel. We're into this stuff. We admit when we're wrong, which no one's allowed to do for some reason. Got to be right more than you're wrong or get a different job, but still, I embrace those mistakes. I want to be perfect. I want to be great. And that's unachievable. And when it comes to stocks, it's like golf. You shoot a 59, you're going to go out there and try to shoot 58 or 57. You're going to get pissed. You can't say, I won, right? It's not like that. It's always just learning and learning and learning. And just AI is so cool. But when it comes to our products and services, we know we're better than our competitors. But they always have bigger marketing teams. They're able to market everywhere. And getting new people on our file is going to result in great things, which we're already seeing for our company. That's why that event that we did, our web events, that we're doing more of these things. We're doing them live, really live. Not, hey, get ready for this live event. And the whole freaking thing is taped, which some of you are used to seeing. Our Q&A was totally live. Our first event was totally live. Any mistakes, anything falls behind me, it's live. We're having fun. I don't care. The show goes on. But now we're getting out to a lot of new people, and I think that there is massive, massive, massive demand from people who want to learn about how to invest and find someone that they could trust in an industry that's not so trustworthy. And it's been that way for the past decade, and it's sad. It needs to be changed. That's why I started this company. Took a while to find the right pieces and get them in line and trying to compete when you can't really compete with big guys who have more money than you and bigger marketing teams and stuff like that. This is a way for small companies to compete with large companies to take market share, to change it. Instead of getting a piece of the pie, you become the pie. That's what AI is going to do. And that's what this newsletter is about. It's not just about, Curzio is not just about stock picks. It's not. We're offering that, of course. You're paying for that. You're going to be testing new technologies, having fun, maybe doing deep fakes, telling you they're deep fakes. Everyone's so bad, but they're really funny. You want to start a war, a nuclear war, do deep fake, and I'm not talking about that. But just a lot of the announcements. Did you know those announcements? All those announcements came this week. Do you know that? No, we know that. We're on the right list. We're talking to the right people. This is the stuff I want to bring to you. And every time that people signed up to our newsletter, they got a phone call, 10-minute phone call. And so far I've talked to about 15 people, and most of those people have all talked about not just the newsletter and everything. They said, thank you, I subscribed to crypto, we're doing great, which is awesome. That's what we do here. I get paid by companies to show you gains. If we do, you're going to subscribe to more products. It's that simple. But almost all of them were talking about implementing it in their own businesses. And this is what we're doing. And this is amazing. I'm using this, and just the plugins and the add-ons, all that stuff. That's what this newsletter is going to be, along with lots of exclusive interviews. And if you want to learn more, go to Curzio AI. It's CurzioAI.com. And you can claim that special offer, which is not going to be around much longer. And anyone subscribe, thank you so much for the support. You'll be really happy with that newsletter because you can see I'm excited as ever to cover this trend. I wouldn't launch a newsletter on a specific trend almost ever. I'm not talking about small caps, large caps. I'm talking about like a gold newsletter or a biotech newsletter, because it's in favor. This is something that's going to be around for the rest of our lives and continue to get better and better and better. And you want to be around it. And you want to be a part of it. And you want to be able to make a lot of money off of it. So guys, you can go to CurzioAI.com to learn more. So that's it for me. Enjoy the Final Four. I'm going to talk to Wall Street Unplugged premium investors tomorrow and listeners tomorrow. But for those of you who are not on that list and listen to that podcast, Final Four is coming. Great. Should be great games. Also, look at the women's. Caitlin Clark is just insane. LSU Iowa got 20 million views. Record for women's basketball. Yep. Just really, really exciting. Connecticut's back in it. Buchers. It's just, I never thought I'd say that about women's college basketball, and it's here, and it's exciting, and it's a lot of fun, which is cool. Men's and women, looking forward to it. Enjoy it. Thanks so much for listening, and for everyone else, I'll see you tomorrow on Wall Street Unplugged Premium. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.